website, email, whatever. Not saying that I have like all the answers, but it is a cool challenge to me. It's fun for me to talk about. They say the ultimate form of understanding is when you can teach it. So that's what I'm gonna go for right here. And KWizzle is saying basically he's thinking about going on leverage, looking for the next big move. And he's asking, how do you handle leverage trades, and at what times do you deem them appropriate? So it's a really good question, a really good topic of risk management, which I have made a quick little spreadsheet here to kind of put out my thoughts on the topic. And really, I'm struggling with this issue myself. It's the allure of trading on margin is very strong in Bitcoin. When the more you margin, the more you can win. But ultimately, what it comes down to is the flip side of that coin is the more you can lose as well. So to be honest, I don't trade margin that much, and I'm working on some tactics to be able to get bigger position sizes. But really, I mean, let's just look what's going on when our example here, we have $5,000 equity, and we're going to be safe, savvy investors with 2% risk on any given trade. Well, 2% of 5,000 means that we can only take a $100 hit before we have to get out of that trade. So that means that if we have our position size of 10 Bitcoins, $100 risk, 100 divided by 10, we can only lose $10 per Bitcoin before that full $100 risk tolerance is going to be realized, and we're going to have to get out of the market. So as you can see already, I mean, shit, just 2% risk, our stop is already pretty tight. If we want to go to a 20 Bitcoin position size, we have to be able to get into that position with a $5 stop loss, which is a precision. That's like surgical trading. If you can trade with $5 stop losses consistently, and it only gets worse as you go to 30. Now we have a $3 stop loss, which is just madness, and now we have 50, which is a $2 stop loss. And notice that we're not even using that much leverage, right? So we can expose ourselves to a decent amount of risk without even 10 Bitcoins with $5,000. You're not even, the value of that position at current market price is $2,200, right? 10 Bitcoins times the Bitcoin price right now. So you're not even on leverage right now, and it's pretty easy to expose yourself to, some serious risk. And even if you go 20, you can see $5 is just, if anyone can consistently and profitably trade with a $5 stop loss, I'd like a video response, and I'd like to talk with them and see what they're doing, But so that brings us to a slippery slope, where say we want to go 50 Bitcoins long. And so KDubz, KWizzle, 2.2 leverage, you're talking about 2.5 leverage. We've got a 50 Bitcoin position with our, $5,000 equity example. Right now, our stop loss is $2. That's stupid. So the only way we can give ourselves some breathing room is to widen our risk, is to assume more risk. So let's just assume 5%. Well, our stop loss is now $5. That's really doesn't do us much good. Let's say we want to assume 10% risk, and if we assume 10% risk, we can only achieve a $10 stop loss. So this is the conundrum that I find myself in a lot of times. When I'm just putting on a position, if I want to go, 2.5 leverage, I need a $10 stop loss, and I need 10% risk. That means I need to, be willing to risk $500 of my 1,000 or 5,000 equity on just one trade. And we're going to take a look at why that's kind of stupid. For only, that's stupid unless you're one of just the most seasoned market scalpers or traders or whatever. Unless you've got years of market experience and you've mastered your psychological trader, it's just insane. So let's look at these two scenarios. This is actually from like a video, an ICT video, where he was talking about his forex risk scenario. So I basically stole this from him and applied it to Bitcoin, but it just serves such a pretty strong point. Let's say we have scenario A and B. Two people start with $5,000. Now, this story is not a very uncommon story, and in fact, probably everyone has experienced 3 losing trades in a row. So that's what we're going to do. Just 3 losing trades. Even the best people in the world have lost 3 times in a row. Trading is not an exact science. It's pretty much just gambling smartly, and you can easily lose 3 times in a row. So let's just see what happens to our 2 friends at 2% and at 10%. Dude number 1 loses 2% 1 time, 2 times, 3 times, and he's lost, $294. He's still got he's still got $4,006. He's going to come back from that. He's lost 5% drawdown. That's really nothing. I mean, psychologically, he's going to be healthy. He's going to learn. He's going to draw, or he's going to cut back on his trading sizes, and he's just going to learn more, and he's going to recover from that. Trader 2 is going to lose 500, then he's going to lose another 500, another, almost 500. And he, in 3 trades, which could be in the course of 1 day, in the course of 1 week, he could lose 27% of his equity, $1,300. Now, he's not going to be very sane from there, and he's not going to be trading from an optimal mindset after he's incurred such a huge and rapid loss. And, the big thing here is that it's not just 27% loss. It's not just a $1,300 hit to his account. It's that in order to get back to break even, he actually has to make 37% on his money now, because now his equity is 3,600. So now he has to make 37% of his current equity of 3,600 just to get back to 5,000. And this kind of scenario just breeds a terrible mentality that a trader never wants to be in, and is probably just going to lead to him increasing his risk, taking too many trades, and ultimately going broke. And that's why I avoid this scenario, because that's not a good scenario for me to be in, right? I'd much rather just lose these 3 trades, and I could make 6%, in one smart move. I could make 6% in one, nice daily swing, one, couple day swing, intra-week swing, and I would be back like those 3 losses never happened. I'd be, happy, and my psychology would be good, and I wouldn't be doing anything stupid. So that's why I say it's hard for me to recommend anyone trade leverage, unless they're just like the Wolf of Wall Street, just balling out of control, and they have like an ironclad mentality, psychology. Their discipline is just perfectly fine-tuned to the markets, where there's no questions asked. They follow their trading plan, and if something goes against them, they can easily stop the bleeding. But most people cannot do all that, and it's ultimately going to lead to ruin. And one more thing before I get into this example of how to kind of scale in to positions and not risk more than 2% and kind of build a big position is something that Chris Laurie said that really hit me. He said, you want to survive long enough to have this business change your life. And what that means is that you just want to survive, right? A lot of people right now are talking about 20 times margin, 20 times leverage, 10 times leverage, trying to make, trying to get rich right now. And that's really not, I mean, I think nine out of 10 people are just going to go broke with that mentality. Um, when you're starting out, if you're starting out, um, say you've been trading 3, 6, 9 months, maybe a year, you're going to be the worst trader of your entire career. So everyone right now, myself included, is as bad of a trader that they're going to be from here on out. So you want to kind of earn your stripes, and you kind of want to just get a lot of experience and a lot of knowledge and a lot of skills before you start messing with margin, in my opinion. If you want that longevity, of course, you could just hit a couple of lucky margin trades and make a lot of money, and everything would work out. I think in most cases it doesn't work out because most people lose money in the market. But yeah, so I couldn't encourage anyone to take a margin trade. I couldn't discourage anyone to take a margin trade because it's your money, and you might make a lot of money. I don't know. And but that just really stuck with me. You just want to survive. Survival is not getting rich and just falling out of control. It's you just want to survive, learn your lessons, develop your mentality, develop a trading plan, and I think that's the most solid strategy regarding margin trading. If you're ready, if you feel you're ready, then go for it. If you wanna, if you got a good feeling about something, I don't know, man. I'm not a trading advisor, man, but that's just my thoughts on margin trading. But let's get into how I might do something like scaling in to a position really quickly, because I'm starting to ramble, and I've already done this once and I fucked up, so I got to redo it. These are my very professional drawings that I'll just remove real quick. That was the secret to Bitcoin, by the way. Right there. Y'all missed it. But let's say we're bearish here, and like I said, my first video was about these consolidations, which are pretty sweet. I mean, when you see these consolidations, you know shit's about to go down. And this, obviously, I mean, this was 600, and we've just been going down to like 200, 100. So this is a pretty key area, and let's say once we fail to make, a higher high here, fail to take out this high, we're feeling pretty bearish, and then we start taking out lows. We could buy this retracement, or we could sell this retracement, and this would be trade one for us. So let's say we just sold here. In the middle of this consolidation, let's say it's just 625. We would then place our stop loss above the second high, the second swing high. So to be safe, we could go all the way up here. And then the second swing high is something that ICT teaches. And, it's just good to listen to him. So right now, what are we exposed to? Well, from 625 to 640, let's call it. Let's say we've got $15 worth of risk exposure. Let's just say, boom, 7 coins, that's 14. So basically, we can sell short 7 coins right here, and we're well within. That's a stupid 7. We're well within. We're well within our risk parameters. But right. So we sold here. Come on. And stop loss is now here. But what's going to happen is, what happens in these consolidations, right? We see the writing on the wall. As price cannot hold this consolidation, it's moving lower. Big money is selling here. It's going to consolidate again as smart money pairs orders, and by now, we can kind of see Bitcoin's pretty screwed. and we can buy here and put our stop loss above the second high again. And so now what that does for us is, remember, we have 7 coins short from here, but if we move this stop loss here, and then again we have 7 coins that we just put on short from right here. Well, now all of a sudden our 625 shorts are making us, you know, 25 bucks, 20 bucks, and our new position that we've just put on, let's say we got it at 590, that's a $15 risk to us. And so now we're short 7 bucks, but our net risk exposure to the market, well, if we have moved our stop loss here, so if our stop loss from up here gets triggered, we actually make $20. And if our stop loss here gets triggered, we lose 15. So our net exposure to the market, our net risk exposure is, you know, we're making money. We're not exposed to any risk. So we can actually add on more to this position, say right here, or we can just take a bigger position right here. We could take 14 coins right here, and that would, you know, then we would be more heavily weighted toward our position here. So if the market were to stop us out, we would lose money, but we wouldn't lose more than 2% because we're already profitable here. And that's basically the key on how to scale into a position. You know, obviously it's pretty complicated. I mean, this is a hindsight example, and it doesn't always happen this perfectly. Sometimes the market's going to be stupid and it's going to like do some like Microsoft pump just and screw everyone, and then that's just going to ruin your plans. But that's just an idea that I'm working on, and it really takes knowing the market. And it's not easy, but it's definitely what I'm leaning towards being the solution to accumulating bigger positions. Definitely not. I'm not looking to go too crazy with the margin. But I hope that helps. If anyone else has any more questions, I'd like to give a crack at them and make a video out of it. Just YouTube comments, Twitter me, @BallerTrader, TradingView @BallerTrader.